All right, welcome to The Explainer. I am so incredibly pumped you're here with us today. We are diving straight into a fascinating business case study, and if you're in the institutional investment space, you're going to want to pay close attention. We're literally deconstructing one of the most insane wealth-generating engines in modern history, Apple's mega-cap valuation. We'll look at the exact economic models that allow a company to hit these unimaginable heights, and honestly, how they aggressively defend that turf.
Okay, let's dive right into our roadmap. We're going to cover 1. The trillion-dollar valuation. 2. The virtuous cycle explained. 3. Avoiding the vicious cycle. 4. Competitors and innovation. And finally, 5. Sustaining market dominance.
Starting with Section 1, the trillion-dollar valuation, anchoring the scale.
$2.7 trillion. Let that sink in. As of September 2022, that was Apple's staggering market capitalization. To put that into perspective for you, that is roughly the entire GDP of the United Kingdom. For us institutional investors, this isn't just a big number on a screen, it represents this gravity-defying concentration of capital. It kind of forces us to ask, what underlying mechanics can possibly support a valuation this massive without it just collapsing under its own weight?
I mean, that valuation firmly places Apple way above absolute heavyweights like Amazon and Google. At this snapshot in time, shares were trading at a robust $155 a pop. Now, this isn't just market leadership, folks. This is absolute market supremacy. But, supremacy doesn't happen by accident. It requires a very specific self-reinforcing economic engine.
Which brings us to Section 2, the virtuous cycle explained, the economic engine. So, what is a virtuous cycle? Well, it's a positive pattern where a successful solution leads to more desired results in this continuous, unbroken chain. Think of it like a giant, heavy flywheel. It takes a ton of energy to get it spinning at first, right? But once it's moving, man, it really gains momentum. Every single push builds on the last, and suddenly it's generating an unbelievable amount of power seemingly all on its own. That's the exact dynamic driving Apple's success. Let's look at exactly how that flywheel turns for Apple. First, they innovate, which creates heightened demand. Because people absolutely crave the newest device, Apple gets massive pricing power. They are not racing to the bottom on price. And that pricing power, it directly fuels expanding profit margins. Then, wider margins create improved cash flow. And finally, those literal rivers of cash allow them to reinvest and return capital to shareholders, driving higher stock prices. It's just a perfect closed-loop economic engine.
But what happens when things go south? Section 3. Avoiding the vicious cycle, the downward spiral.
We really need to explicitly contrast Apple's current winning model against its dark mirror, the vicious cycle. While the virtuous cycle builds all this positive momentum, the vicious cycle compounds rapid losses. And look, for a company of Apple's size, falling out of their groove wouldn't just mean a tiny dip in earnings. The stakes for corporate survival are absolutely massive here.
The vicious cycle reality usually starts with a dreaded loss of market share. To win people back, you're forced to lower prices. But lower prices mean squeezed margins, which quickly leads to layoffs just to reduce costs. Then, slashing costs hurts product quality or support, leading to customer dissatisfaction. And finally, just to keep the lights on, the company takes on debt. It is a rapid, brutal unwinding of share prices and shareholder value.
So how do they stay far away from that spiral? Section 4, Competitors and Innovation, the Market Reality.
Check this out. As of Q 2022, Apple held a staggering 48% share of the entire US smartphone market. Nearly half the country operates inside their ecosystem. This isn't just about selling phones anymore. It's about establishing this massive base of users who are now primed to buy apps, accessories, services, basically keeping that virtuous cycle spinning with incredible force. Now, obviously, the market isn't a total monopoly. Apple faces increasing, very real competition, most notably from Samsung and its super popular Galaxy smartphone line. Samsung continues to apply intense pressure with aggressive pricing and really feature-rich devices. And honestly, this competitive threat is exactly why Apple simply cannot afford to let their flywheel slow down for even a second.
The way Apple defends its turf against players like Samsung is through a calculated history of product launches that build an incredibly sticky ecosystem. Think about the last decade or so. The iPod, the iPhone, the iPad, the Apple Watch. These didn't just sell well, they literally wove themselves into the fabric of global culture. They built a fiercely loyal customer base. If you own an iPhone, an iPad, and an Apple Watch, switching to Samsung isn't just buying a new phone, it's uprooting your entire digital life. That fierce brand loyalty, that's their ultimate competitive moat.
Which brings us to our final and maybe most crucial section, Section 5, Sustaining Market Dominance, Future Outlooks.
It's super important we objectively assess the landscape going forward. Critics have long argued that without founder Steve Jobs at the helm, Apple has lost its disruptive, innovative edge. Analysts point out that recent categories, like the Apple Watch, initially lacked that immediate world-stopping cult fervor that we saw with the very first iPhone launch.
But to impartially counter that critique, just look at their masterful use of iterative innovation. They don't actually need to reinvent the wheel every single year to keep the virtuous cycle turning. They add cellular service to smartwatches. They add seamless wireless charging to smartphones. They perfect facial recognition for security. These incremental advancements consistently drive massive upgrade cycles. It just proves that you don't always need a revolutionary breakthrough if you already have deep brand loyalty and can consistently refine the user experience.
Of course, that kind of iterative innovation takes serious capital. $350 billion, to be exact. That's the sweeping U.S. investment Apple announced, taking advantage of favorable corporate tax breaks. This right here is exactly what happens when improved cash flow is operating at maximum efficiency inside that continuous economic loop we talked about.
The crucial takeaway is how they actually deploy that capital. They aren't just hoarding it, right? They are reinvesting in growth to ensure future dominance. That $350 billion domestic investment translates into up to 20,000 new jobs and a brand new second corporate campus housing thousands of employees. They are literally physically building the infrastructure required to keep this economic engine humming for decades to come.
So, that leaves us with a final, pivotal question. With such fierce brand loyalty deeply woven into our daily lives, and unprecedented rivers of capital funding endless innovation, can any rival realistically break Apple's virtuous cycle? It is the multi-trillion-dollar question every institutional investor needs to ponder. Thank you so much for hanging out with me for this explainer. Keep analyzing, keep questioning, and I'll catch you next time.